Hello, traders. It's Tuesday evening. We had a big market move today based on a Trump tweet that said that the stimulus bill talks are off. We're going to see some overnight selling. S&P futures are down 14 points as I'm recording this. So we're going to try and take advantage of this. We'll take a look at the market. I've got some picks for you. We need to get filled. I feel like the bid is strong and like it's going to continue to be strong. Here you can see how the market today was in kind of a choppy pattern. There were talks between Steve Mnuchin and Nancy Pelosi. The market kind of comes up, it checks the high of the day, pulls back a little bit, and then a news release came out that said, oh, they talked. Both sides are still far apart. What did the market do? Boom, 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 boom. It rallied like mad. On what news? What changed? Absolutely nothing changed. That demonstrates how strong the bid to the market is. Nobody wants to miss a year-end rally. They feel like a stimulus bill is going to get done. It's just a matter of time. And when the news came out, we saw very, very heavy selling, and the market closed below the 50-day moving average. So let's take a look at that. And you can see here, it's been riding and chopping around this 50-day moving average for about the last week and a half. Now, here's what I like. You can see how the market sold off. As I've been mentioning, 3 steps down, 2 steps back, 3 steps down, 2 steps back. This is not a hard sell-off. This is merely profit taking after a really nice run and after a buying climax. Very normal for the market to pull back and correct. It hits the 100-day moving average, and now all of a sudden we're bouncing. We've gotten through this downward sloping trend line beautifully. And look at the day after this test of the 100-day moving average. Look at that rally with a close on the high of the day. The next day was a Monday. Boom. Big gap up. That gap is able to hold. This market wants to go higher. Here's my take on all of this. Whether it's Biden or whether it's Trump, who cares? There's going to be a stimulus bill. If that's what the market wants is this stimulus bill, it's going to happen. It's just going to take us an extra month for it to happen. After the election, I can guarantee you, whichever party is in control, the stimulus bill is going to be the first thing on their docket. So I view this market pullback that we're getting today and tomorrow as an opportunity for us to try and sell out of the money bullish put spreads on stocks that are pulling in, that have relative strength, and that have a tendency to rally into earnings season. That is our game plan. So before I go through tonight's video, I want to take a look at our other positions that we tried to get on, and I want to give you a separate set of instructions for tomorrow. So yes, I'm doing a weekly swing trading video a day early because I like the setup for us, and I don't want to wait another day. So we had NIO that we were trying to get filled on. The stock rallied. We were not able to get filled on it. I still like the trade. So keep this trade open along with anything that is not dated October 6th, which is tonight. Anything that is not dated for tonight's video, we will try and get in this trade tomorrow. And if we are not filled by the close on October 7th, we are going to cancel those orders and we'll take a pass on it, but we will continue to try and work the trades that I'm highlighting tonight, and they are all ready for you in the staged order entry screen. All you have to do is click submit if you're using the API. Have these orders working before the open. It's going to be really scary because the market's going to come in hard, I suspect. And if you don't have those orders working before the open, you may miss your chance to get filled. And we still need some of these stocks to pull back for us. So I'm not sticking my head in the lion's mouth on these. We need those stocks to come in. I'm expecting it. This is our opportunity to get filled on some of these stocks. So by the way, we did get filled on Abbott. We got filled on the 104, 103 bullish put spread. We also got filled on the diagonal spread. Abbott's been a little soft, but I have no worries with the stock. I think it's going to continue to find its footing here, and I think it's going to rally just fine into earnings. Remember, coronavirus is alive and well. Abbott has 1 million test kits that the government is buying from them, so they've got a very good business backdrop right now. So let's take a look at some of the other trades that we've got. I'm not going to go through each one of these. You know what the orders are. McDonald's is in here. That was a trade that we tried to get off Sunday night when I put that in the video. Stock took off right away. We weren't able to get filled immediately. I like it. I still want to try and get in that trade. So let's take a look at the stocks that I've highlighted today and the orders that we're going to have working. TWLO is the first one on the list. So I'm going to bring that up. Why do I like that so much? Well, you can see the 100-day moving average right here. The stock bounced off of that level and rallied through that 50-day moving average, and then they pre-announced. They said that their earnings are going to be much better than expected. Well, the stock absolutely took off, and now it's getting through that all-time high. Fantastic relative strength today, multiple levels of support. So I'm going to try and sell a bullish put spread all the way down to the $250 strike price, which is right there. That is the 50-day moving average. So we have that support, we have that support, we have that low of the day right there as support. We also have that prior high, which is right around the $290 level as support. And let's take a look at the stock itself today. So here you've got a stock that's in go-go mode throughout the course of the day, doing really well in the afternoon, and then the news hits. Well, the SPY sold off hard. Big drop. Well, the stock dropped too. But look what happened right here. Get the nice little bounce in the SPY. Stock starting to move a little bit higher. And then the bottom falls out of the SPY. What did the stock do? Boom, boom, boom. There are buyers. We're going to use that to our advantage. We're going to try and sell this bullish put spread. We're going to go way down to the $250 strike price, and we're going to be selling this bullish put spread with an October 30th expiration. Why? If I hover over the E, I can see that earnings are on 11/5, November 5th, so I want to make sure that I'm selling a spread that expires before November 5th. I also do not want to have any bullish put spreads out there over the election. Let me repeat that. I do not want to be short any bullish put spreads into the election. That is a binary event. I'm going to avoid that risk. I will let the election results happen, and then I will trade accordingly when the dust settles. But I do not want to be out there in limbo, especially if the election results take 2, 3, perhaps 4 weeks to be determined. Gosh, I hope I'm wrong on that and that it doesn't happen. That's a risk I just don't want to take right now. I'll day trade the heck out of the market during that period, but I am not going to swing trade it. So let's take a look at where those options are trading. I'm going to put up the option chain and we'll take a look at the TWLO options. I'm going to enter that symbol and we're going to the October 30th expiration date, which is before the earnings announcement. And I'm going to click on the 250 puts, and I'm going to click on the 247.50 puts. And you already know that because there are $2.50 between the strike prices, I'm going to be looking to get a 50-cent credit for this spread. So to reiterate, I am going to be selling the October 30 250 puts. I'm buying the 247.50 puts, and I'm doing that for a credit of 50 cents. Stock symbol is TWLO, and we have one other thing working in our favor. You can see the blue dotted line, that is 2 standard deviations. The red dotted line is 1 standard deviation. So we also have that working in our favor. And option implied volatility spiked today. I expect them to be high tomorrow. I expect the market to come in. Let's hope that we get filled on this. I really hope we get this trade off because I like it. So next on the list, we're going to take a look at another one of our favorites in the trading room. And before I do that, I'm going to show you how I found it. And I'm going to bring up custom search. And we'll take a look at this. And here you can see the custom search engine. Now I have option liquidity marked 0 to 15. It's good option liquidity. Pre-earnings bull. You've heard me probably for the last week, harping on this particular search. It is a really good one. It's available to Option Stalker members. If you are a swing trader and that's why you bought Option Stalker, you must use this search, especially now on the eve of earnings season. So I've gone through for the last 3 years and I've tracked what stocks do 2 weeks ahead of the earnings announcement. All of these stocks have rallied more than 75% of the time once they get inside of that 2 week window. They are perfect for selling out of the money bullish put spreads. This is a huge statistical edge. I can't say it strongly enough. This is why you bought Option Stalker. So please make sure you're using this search. What I did was I went out to October 26th because I want to make sure that I've got a couple of option expiration cycles, weekly options that I can sell before that earnings announcement. And then I went out a couple of weeks to November 6th. So if these companies announce earnings between October 26th and November 6th, and if they have a history of rallying into that earnings announcement, they make the cut. And they also have good option liquidity, and they also have weekly options. So let's make it just a little bit more restrictive. And let's say that we'd like to see a stock that has relative strength on a daily basis and an hourly basis. Sounds good to me. Every box that we mark in our searches increases our probability of success. So I went through the list. You've got about 20 candidates. Look for the charts that really have those strong technical support levels. Look for that relative strength. Those are going to be your best candidates. As you glance down the list, you're going to see AMD, love it. BYND, love it. McDonald's, you already know I like that from last Sunday night video. UPS, I like it. So those are going to be some of the stocks that we're going to be taking a look at. But for right now, we want to double click on BYND. Seems like every day when I come in, we're going through our stocks and we're looking at our heavy buying list. And BYND is up there all the time. Look at that relative strength right in there, and you can see it because the orange line is above 0 on the 10SI indicator. Beautiful breakout right in here, right at the $160 level, and it is off to the races. Take a look at the 5-minute chart, see how it reacted today when the announcement came out, and you can see that's the open for the stock on a 5-minute basis. It did not retrace all the way back to the opening price, and in fact, it held really strong in the last few minutes of trading. You can see that by the orange line here. So what we're going to do on BYND is we'll go back to the daily chart, we'll hover over the E, and we will see that earnings are released on 10/26. That means that we want to select an option expiration cycle that is before that. That would be October 23rd. We also know that we like that $160 support level right there, which was the prior breakout. So we're going to go down to the 160 put, and we're going to click on that. And then we're going to click on the 157.50 put. And we know that because there are $2.50 between the strike price, we want to get a 50-cent credit. So to recap, on BYND, October 23rd, we're going to sell the 160 put, we're going to buy the 157.50 put, and we're going to do this spread for a credit of 50 cents. Now you can see we're right on that 2 standard deviation line there too. That's another added benefit for us. Let's take one final look to see where we might find support on this stock. The open from today is the first level of support. 165 would be the second level of support. 160 is the third level of support, and it's right on that breakout right there. This stock wants to go higher. If the market pulls back, yes, I think the stock is going to pull back. That's what's going to give us a chance to get into this trade. And we know that as it comes up on earnings, it's going to have a tendency to rally. So that's our play. Let's go to the next trade. And I'm going to go back to the custom search engine, and I'm going to take the top stock on the list, AMD. Here's why I like AMD. You can see there's the last earnings announcement. Stock gaps higher, long tail under body. Look at that low right there. Technical analysis really works, and it's because every other trader sees exactly what I see. That low right there should be support. By golly, support, 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 support. Look at how well defined that support level is. Well, we're going to take advantage of that, and we can also see that the stock has relative strength. Right there you can see the orange line above zero. This stock has really good relative strength. We also have the 50-day moving average that's also going to be a support level. So if I look at this, I've got that open right there from the other day at 82.50. That's going to be support. I've got the 50-day moving average. That's going to be support. Small support right in here and big support right there. So we're going to have all those factors working in our favor, and I'm going to go into the 5-minute chart and we'll take a look at how AMD performed today. It was a little bit soft. It opened here, and you can see how it actually did close down on the day after that big market drop, but that's okay. It's been strong relative to the market the last few days. Semiconductor stock, a little bit volatile. So let's go in and see how the options line up for us. We'll go back into that daily chart to see when the earnings announcement date is, and it's on November 4th. So we know that we can go out to the October 30th expiration date, and we're going to try and get ourselves as far out of the money as we can. So we're going to go down to the $74 strike price. We're going to sell the $74 put. We're going to buy the $73 put. And you can see how that is right inside of this major support level. So we're going to sell the AMD October 30th $74 put. We're going to buy the $73 put, and we want to do this for a credit of 20 cents. Now you can see that the spread is 7 cents bid, offered at 54 cents. So we should be able to get filled on this, I believe, right away tomorrow. Before I make this trade official, I want to see if there's a chance, and I want to take a look at this low right here. And the low of the day was 73.88. Yep, that's why I wanted to get right in there. So we're good with this. We're good with this at the $74 strike price because I'm expecting that right in there to hold. So that's the spread. And I think this is one that we have a chance of getting filled on right away tomorrow. So let's go to the last spread that we'd like to do, and that is on UPS. UPS. You can see a very tight compression. Typically, when you have a tight compression like this in a breakout through that horizontal resistance, the stock is going to go. It hasn't had that kind of lift to it, but UPS is coming into a very seasonally strong period. Lots of packages sent during the holiday season, so it's been able to hold up very well along with FedEx. I like this support level right in here. You can see it comes into play at 156, so we're going to be looking at the 155 strike price. Going to hover over the E. You've got 1027 is the earnings date, so we have to go inside of October 27th. Let's bring that chain up, see what we've got. And October 23rd will work. And we're going to go to the 155 put. We're going to click on that, and then we're going to click on the 152.50 put. And you can see here that it is currently 7 cents bid, offered at 37 cents. Well, because I've got $2.50 between the strike prices, I know that I'm going to want to get a 50-cent credit for this. So let's recap the trade. We are going to sell the UPS October 23rd 155 put. We're going to be buying the 152.50 put, and we're going to be doing that for a 50-cent credit. I like this trade also. Now we're going to need some help on this. You can see the spread is offered at 37 cents right now. I feel that the stock's probably going to have to take out this low right in here come into maybe the 164 level, which would be a $5 drop tomorrow. If it drops in the next couple of days by that $5, we'll still be testing that breakout, and I'm still comfortable with that, but we'll be close enough to have a shot at getting this spread done. All of these stocks have a tendency to rally into earnings. That's what we're trying to take advantage of. We're also taking advantage of that relative strength, which you can see on UPS right here as well. So the final note of the day is going to be what to do with our open orders. If they do not have October 6th listed by the date in staged order entry, you are going to be canceling these orders tomorrow, Wednesday, October 7th, at the closing bell if you are not filled on NIO, Netflix, Walmart, or McDonald's. In general, the way that our spreads are going to work is that they will be live orders until the next weekly video, unless I specify in the video how long we're supposed to be working these trades. So these trades for October 6th, dated October 6th, are going to be live until I notify you otherwise. If I really don't like what's happening in the market tomorrow, I'll send you an email tomorrow night. We'll cancel the orders. We'll make adjustments as needed. But this is the weekly video for this week. I think we've got an opportunity tomorrow to take advantage of some bullish traders, probably some bullish speculators who got trapped and they were expecting the market to continue to float higher, expecting that stimulus deal to get done, and now they're taking some pain on their positions. That's going to fuel the market sell-off tomorrow. S&P futures down 14 points. I think at very least tomorrow we could probably test this 332 level. That would be my guess on where the market finds support right now. Ultimately, if it gets really nasty, I still think we're going to find support above the 100-day moving average. Know that a stimulus bill is coming by either Biden or Trump. We just don't know which one, but it's going to be coming. It's just going to take an extra month for it to get here. And that's what gives me the confidence to be in the market with 0% interest rates. Asset managers are still looking to put money into the market because they can't make anything in fixed income right now. So I don't see that there are huge economic risks right now. We had ISM manufacturing came out last week. It was a little bit light, not dramatically. It's okay number. We had the unemployment number Friday was a little bit soft, but ADP was good last week. We had consumer confidence at 101.8, just a gangbuster, robust number, fantastic number. And we had ISM services came out yesterday, very good number, 57.4. So I'm not worried that the economy is going to fall off a cliff here. I am concerned, obviously, for small businesses and this second wave of the coronavirus. I think they're really struggling and they do need the help. So it's coming. It's just going to take a little bit longer. So please have these spreads working out there before the open tomorrow. We need to be able to get these trades off as the market's coming in because I don't know how long this sell-off will last. So if you wait, and you think you're going to hit the button at the perfect time and get filled on it? Probably not, because the market will have already bounced and these spreads will already start to collapse and you'll be left holding the bag. So please have them working before the open tomorrow to give yourself the best chance to get filled on them. If you're watching this video on YouTube, I've released it to the public on Saturday. I record it earlier in the week, normally Wednesday nights. In this case, it's Tuesday night. So I want to have members have an ample opportunity to get into the trades before I release it to the public. But take a look at these picks. Your takeaway should be the way that we find the trades, the way that we structure the trades, and then please take a look at the stock performance from the time the video was recorded, and I think you're going to see why this systematic approach works so well. Thanks, everybody. Have a great night. Good luck tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.